If you look at the short term, our view is that the market is steady as it goes. Right now we're continuing to ship flat out with very good production, and we see that Australia is uniquely placed in relation to the product we offer, but also the proximity to market, and that certainly puts us in the box seat. I think if I look longer term, certainly in terms of long-term demand, as China continues its urbanisation and industrialisation, and as India and Indonesia, the Philippines, Thailand, Vietnam, the former Soviet Union, Middle East, Brazil, I mean pretty well all developing regions in the world go through the same urbanisation, then until David's new product comes along, steel is going to be a very important ingredient, and iron ore is absolutely fundamental to that. I think in relation to China, we've all heard of Wen Jiabao's comments recently about the importance to keep the Chinese economy moving. I see various estimates of where Chinese GDP will be this year, and certainly nobody knows exactly, but Rio Tinto's view is that Chinese GDP for this year will be around 8%, a little bit up on where the Chinese themselves think that it'll be. When we look at the Purchasing Managers Index, recent figures, 53.1, that's fairly robust. I know that there are a lot of people who are sort of casting doom on that, but we're just not physically seeing that on the ground. So we see the iron ore business as being a very robust business. We see that continuing both in the short term and long term. We have a number of projects to expand our operations. These are things that we're continuing to work on, and I would expect that they will be approved by our board in the next few months.